Ladies and gentlemen, shake my hand and welcome to another War Room, War Room 76. As you can tell, I'm still not doing well. In fact, in the last War Room, I actually completely lost my voice towards the end. So I couldn't punch out a lot of videos during the week. I do apologize. I've got my ginger tea, I've got cayenne pepper with me. We're going to see how far we can get. But in this War Room, I want to do my best to get through 20 trading assets, so 20 good swing trading signals. Now that we have CPI behind us that dropped on Wednesday, now that we kind of like know the direction of the market or what market is pricing in, I want to kind of like feed into that momentum, really look at the data carefully for about 5 to 10 minutes, and then dive into these 10 assets. As usual, I would appreciate it if you do like our videos, we do share, we do subscribe. All right, we do this week after week, every single Sunday. As long as I'm feeling okay physically, I'll show up for you and do war rooms with you, right? War rooms are where I map out trading signals. I'm a supply and demand trader. I use smart money concepts and confluency. If you've been following us for at least 2 months, 3 months on the channel, you will start to realize the type of consistency behind our trades. I am specifically a set and forget trader. I find that helps me manage my trading psychology, immensely better than traders who do market execution. And so because of that, we create the plan today and we trade the plan for the rest of the week. But if you like that kind of stuff, one more time, don't forget to like, share this video with someone, but subscribe for yourself and hit that notification bell as we get in, right? So, War Room 76 today is actually built on a lot of exciting data. We are no longer guessing about inflation data, right? So we can actually now start to see how markets are going to price in stuff. Just a kind reminder before I go deep, I am not feeling well, guys. My partner, she still hasn't had her voice back, right? So it's been good for me because no more. but I just got mine back, right? But there will be a little bit of sniffing, a little bit of coughing, a little bit of sneezing throughout the video. I do apologize for that, but I found it was better for me to put out the content than skip a whole week, right, of no market knowledge. So if you can just ignore me, you will not catch the flu through the camera, and just let me be me. I'll truly appreciate that, right? So, CPI data dropped on Wednesday. I made a lot of comments on our public Telegram group. So if you're not on the public Telegram group, please jump on the public Telegram group. It's completely for free. It's where I need to give you guys quick market updates. Sometimes I'll give you a chart that I'm looking at or a trade that I'm about to take that is outside, the circumferences of these war rooms. So it's something that, just to keep constantly up to date, I do my best in there, right? But I spoke about CPI, and the data and how that actually looked. And fundamentally, there are a lot of things that we need to kind of like quickly unpack in terms of inflation and all that kind of stuff, right? So if I can pull that up in front of you, that would be good. But maybe before we do that, on the link down below, if you just click on one of the links down below, there's a link that talks about registration. This is all you need to do to get on track with your financial wealth. If you're really into finance, if you look into financial wealth, whether it's through trading, investing, some type of latitude to get out of the situation that you're in and throw yourself into something better, then please don't hesitate to click this link and actually enroll for our #1 institutional supply and demand trading course. There's a lot of other cool things down here, but this is very important because towards the end of the year, I always roll out module #1, #2. I always try my very best to actually, make contact with students or live classes on top of all the recorded lectures we're going to get. So that time is coming around the corner. I promised a lot of people module 3 and module 4. And I'm telling you, you don't want to miss that first boat. So please, as quickly as you can, make time. If you like our stuff, if you see that there's actually, profits behind the stuff that we do, there's consistency behind the stuff that we do, then don't rob yourself by just relying on war rooms only, right? Get the full information and enroll for the trainers course right here, right? But, outside of that, there are a couple of things that I would love to talk to you guys about today. And I think we really should technically start with, the kind of stuff that happened during the week that I was not able to kind of like share with you. But for those of you who might, not be interested, in important market data, let me just give you a quick glimpse of what we're going to do together. Right, don't forget this. Every day, in every way, I'm getting better and better as a trader. This is something you should be saying to yourself every single day. I say it with you once a week in the war rooms. I'm hoping, at least by affirming you once a week, it helps. but this works 10 times better when you do it by yourself. 5 times in the morning, 5 times before you go to sleep, 5 times before you have lunch, 5 times when you're in the toilet taking a poop. Every day, in every way, I'm getting better and better as a trader. What are you doing? You're training your subconscious mind to really start to assemble information in the world, to assemble a passion for this stuff, to assemble a desire, a skill set, to start to attract those things to you. You are starting to attract the person you want to be. You want to be a better trader. You made $100 last week. A better trader this week will make 110. You lost 4 trades last week. A better trader this week will lose 2 trades. It is a journey, but you have to start to program your software, the software right there. Right, and please, please, please take me seriously on this. If you just say these words every day, in every way I'm getting better and better as a trader, repetitively, every single day, you are doing more work than most traders are doing out there. All right, a lot of traders, excuse me, a lot of traders work on the hard way, on the technical analysis, or on that. That's good and fine. But if your subconscious mind does not believe you deserve money, you will not get it. It's that simple, right? And we talk a lot about this stuff in the podcast. Right now, we're doing Think Yourself Rich, by Dr. Murphy. Join the podcast. It's for free. Listen in on this information. But yeah, let's focus. And maybe from the podcast, if I can just read you a quote from the previous chapter we did, a few days ago. Decide now to engrave in your subconscious mind. So I'm just reading straight from Dr. Murphy, a clinical psychologist. Trading is 90% psychological. So when a clinical psychologist tells you something, I am always interested and I take it to heart. This is what it says. Decide now to engrave in your subconscious mind the idea of wealth. Ideas are conveyed to the subconscious by repetition. Every day, in every way, I'm getting better and better as a trader. Every day, in every way, I'm getting better and better as a trader. My stop loss got hit. Every day, in every way, I'm getting better and better as a trader. I just blew my account. Every day, in every way, I'm getting better and better as a trader. Why? The man says these ideas are conveyed to the subconscious by repetition, faith, and expectancy. Expect to get better. By repeating a thought pattern every day, in every way, I'm getting better and better as a trader. By repeating the thought pattern or an act over and over again, 5 times in the morning, 5 times at night, 5 times before lunch, 5 times when you take a poop, right? It becomes automatic, auto-suggestion. Come to the podcast to learn this kind of stuff. Now, because your subconscious is compulsive means your subconscious, when it becomes automatic, anything in the subconscious mind is automated. It becomes like a law of gravity. It is a compulsive behavior. You are forced to do what your subconscious programming does. If you are greedy, it's because your socialization around money is terrible. So you bring that stuff to the charts. If you are needy and you believe in poverty and all your life has been hard and everything must be worked hard for and opportunities come very hard and life is unfair, you bring that energy to the charts. So he's saying because the subconscious mind is compulsive, the thought pattern that you repeat and becomes automatic, you will be compelled to express it. So because of that, if you program yourself, you will have no choice but to become a better trader. All of a sudden, trading journal will become important to you. It becomes compulsive. Because right now I'm telling you, have a trading journal. We're in War Room 76. Some of you still don't have one. Some of you still don't keep record. Some of you are about to leave my video now because I'm lecturing you instead of giving you signals, right? To become a better trader, it's not yet compulsive in you yet. Program yourself. Now, I'm about to finish. There is no real difference between this process and learning to walk. Listen, man, no one taught you how to walk. You saw the repeated behavior around the people around you, and all of a sudden, by the time you're taking about 1 year old to about, I think 1 year to 1 year, 18 months, really, that's the gap. All of a sudden, you had enough programming in your mind that human beings walk upright, and you got up and you walked, right? So walk, swim, play the piano. You believe in what you are affirming. Realize that you are affirming it like seeds you plant in the ground. They grow after their kind, right? By watering and fertilizing these seeds, you accelerate their growth. How do you water a seed like I want to become a better and better trader? You give it photosynthesis. What is photosynthesis? Repetition. Feed yourself. What is the best way to do that? Subscribe to the channel. I do a podcast every morning, Monday to Friday. There's a video that will drop in the morning around this good stuff, right? So I'm trying to help. I'm trying to help the best way I can. This is my purpose. I am here to help you master your wealth. Shake my hand. My name is EURJPY. I'm very excited to be here with you. What a powerful quote, man. This is from Think Yourself Rich by Dr. Murphy. We go through this book chapter by chapter every day until it's done. Now, today, because I know somebody's angry, they want to know what we're looking at and get to it. These are the charts I want to look at with you. The first 5 charts are what I call my scenario analysis charts. These charts, write this down. This is the heartbeat of the market. I mean, there are a couple of things I left out, like DXY, you know, the dollar, indices, NASDAQ, you know, for American stocks, all that kind of stuff. But because of the way I've set up this war room, this is all we're going to look at. There are 10 scenario analysis charts. These are my top 5. I am going to give you guys the swing options, the big picture of where these assets are moving and what I think we should be doing now that we've got CPI data out. During the week, if I feel better, I will do a scenario analysis video on all 5 charts. EURUSD part 3, pound EURJPY part 1. You know, I'll make time during the week, right? If I'm feeling better, okay? After we do these 5 charts, we're going to look at the swings. Then I want us to look at a couple of indices and a couple of forex pairs that rock with a couple of indices, right? So after pound USD, we're going to then look at, you know, the AU200. I keep telling you guys, kind of master that index as well, the Australian index. It's a good trade. It's a good chart. You know, pays quite well. But number 1, number 2, you almost want, you know, a situation where you're hedged, right? If other indices are falling, you've got something to buy, and you can balance out your account if you're holding trades, you know, in a swing format, right? It's all about keeping that equity in your account balance up. We're going to look at Russell 2000. We're going to go back to China 50 and see if our analysis around the Evergrande crisis about 1 to 3 weeks ago was valid, right? It's now time to buy or sell, right? And then we're going to look at AUDUSD. AUDUSD is linked to gold. AUDUSD is linked to China 50. It's a mineral, you know, it's a commodity kind of forex, right? Swiss franc JPY, USDCAD, oil, right? So we're going to look at that cluster together. And then the next final cluster we're going to look at today, as long as my voice can get us through, right? Or maybe I'll pause, make more ginger tea, whatever it takes, right? This is the dream. This is the dream to complete 20 assets today with you. So, oops, what did I do? Right, it's going to look something like this. I apologize. Give me 2 seconds. Just move this from my notes onto the whiteboard. And I hope you guys can see the whiteboard. If I'm not doing the thing that I like to do in my live classes where I forget to share the screen, right? The whiteboard is up, right? So there we go. So this is what I want us to look at today. EURUSD, EURJPY, pound JPY, Euro pound, pound USD, the indexes that are listed, and then the final things, AUDNZD, Euro pound. Well, there's a repetition, so that actually helps us, you know, cut time, you know, short by 2 minutes, right? The dollar, Euro AUD, some gold, Euro Swiss franc, Euro NZD, EURCAD, and Bitcoin, right? So if we can do that, you know, in today's war room, we'll have really covered a big share of the market, and this will give us a lot of swing trades to focus on up until the next FOMC meeting. And that's another thing that people forget. My ability to read charts is based on the fact that price is everything, prices in everything, and so I'm not looking at where price is today. I'm looking at where price is going, so I can get on that trade at the right supply or the right demand and ride the wave. So these signals are for the next 5 weeks. This is not just for this week. The title of this video, because of how YouTube works and how your algorithms are set up, I have to make it look like it's just for this week. So this is something that you need to set up for Monday. Some of them could be triggered this week, but for the next 5 weeks, this is how the flow of money is going to look like, right? There are a couple of things. There are 2 more reports left. We have had an NFP on the 5th of August, something like that, with CPI data on the 10th of August. Now we're looking forward to the 2nd of September, another NFP, non-farm payroll, and you know, the week after that, sometime in September, CPI data, right? These will be the last 2 weeks to double confirm what was seen in the markets. Now, let's just get into what's going on. I think what's going on is really crazy, right? We received hot NFP, and I explained why. The expectation was 200 and something K jobs in terms of jobs, right? and the market actually clearly came out and said it created 532 or whatever it was. So markets created double the jobs. That's a heating economy, right? Wages went up. And I'm going to show you why that's important today, right? So we saw the wages up and unemployment fell. Excuse me. This is what Powell was saying. Like, look, man, I don't want to use the recession word because labor is doing well, right? He kept saying that, right? And this is his argument. And now he's got even more data to kind of like continue with that argument. He's not right about recession. The very next day, GDP numbers came, and it for sure proved that United States is in recession, global recession is here, right? And I taught you guys in War Room 75 that be very careful. Be very careful. Markets are a futuristic indicator. They price in the future, number one. But a lot of things around the market operate like that too. That's why we don't like to use indicators for trading in 365. Lagging data creates lagging results. Now, one of the things that are lagging in the markets right now is the Fed interest rates. The market interest rates, right? The market hasn't actually felt the full blow of what these hikes have been doing. These hikes are going to affect companies, they're going to affect the economy, they're going to affect pricing because they're destroying demand. The more you destroy the demand, some businesses are going to start to struggle to maintain operations. When you start to struggle to maintain operations, this unemployment number that keeps dropping from 3.5, 3.6 to 3.5, we might start to see it start to go up. We might start to see more people being unemployed, which will start to change job numbers, which are currently right now very hot, right? They've been NFP beats all year, okay? That's number one, just bear that in mind. So when the Fed interest rates, the lag period stops, and it's crazy because it can take up to 6 months when actual economy can feel the impact of interest rate. And it can take up to 6 to 12 months before an economy can actually feel the impact of a recession. So we must trade these markets, especially if you're a short-term investor, which technically would be more of a swing trader. But if you're a trader and an investor, you must understand the cycles in the markets, right? When to buy the dip, when to hold, right? When to buy the dip, take profits, hold cash. I've been saying this all year. I put money in, I take it out. I trade. When I trade, and I make a certain amount of profits, I dollar cost average into my investments. I invest. Now I've moved almost to 80% into crypto, 20% into old Vanguard stocks, right, for pensions and all that kind of stuff. I'm really in on crypto. But at the same time, while I'm dollar cost averaging, I am keeping a pile of cash, right? Pre-crisis, always have cash because you're going to get good deals. So the whole world believes inflation has peaked. We spoke about this 2 weeks ago, right? Inflation has peaked, and the reason why the whole world believes inflation has peaked fundamentally is because the data says that, right? So they're not that crazy, right? The inflation was 9.1%. The expectation was going to be 8.7. It came in at 8.5%. Inflation has kind of peaked, right? And I think that's something to really dig deep into. I wanted to do that with you this past week, but I just couldn't. Let's look at a couple of things real quick. This is our usual website, CNBC, when I used to do market sentiment readings with you guys for these war rooms, but it did make the war rooms a little bit longer. Just to be clear, I did not stop doing them because it's useless to do them. I stopped doing them because I thought I taught it to you, and now you are doing it yourself. You're going through Forex Live and CNBC, reading the headlines and getting the sentiment the way I've taught you. I can't do it here because we make our war rooms 3 hours. And according to YouTube, a lot of you guys' attention span would start to quit. So it's pointless for me to do it because then I'll just start talking by myself, right? So I just follow the data. If you guys watch all the through videos and you like the videos, and you let me know you like the videos by liking the videos, right? And that's kind of like how it works. So a lot of people's retention fell off, so I stopped this. But this is a very important exercise for a trader. Go through these headlines, go through Forex Live and see what's going on. But if you remember, guys, I told you guys about the VIX, the fear gauge index, right? I remember when the war was happening, I told you guys about the treasury yield and the VIX. And I say to you, the VIX is an interesting thing because it measures fear. It measures panic. It measures uncertainty in the market. And that's what drives the market in terms of volatility. So you can tell that stocks are up, right? It's the futures market. Look at your US 30, look at your S&P 500, up 1.73%, up 1.27%. The NASDAQ are whooping up 2%. Russell 2000, remember I talked about how sensitive the Russell is. Medium cap companies are a better, temperature read in the market, right? We're going to go through this stuff today, but I'm just doing a quick recap. And then I say, look, when these things are doing well, markets are happy. Why are markets happy? Because markets have now got what they believe is a clear path, right? There is now certainty in the market. What's the certainty? CPI data. What did it say? It said inflation has dropped. Now, if inflation has dropped, what did the markets predict? They believe FOMC Powell is going to have no choice but to dial back the violence, right? The stocks have been falling, right? Because Powell has been hawkish, increasing rates. Now, because now the inflation is bowing down to the pressure, the markets believe the FOMC will not come in with 75, excuse me, guys, basis point or 100 basis point, right? Because that was the worst case scenario. But because of this data, the markets now believe, Powell might even come in soft, might even come in and say, okay, fine, I hear you, inflation is dropping, blah, 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 blah. Let's come in a little bit soft. Let's come in at, say, 50%, 50 basis point in September, about 5 weeks from now. And that's a good thing. So that means the markets now have a certain path, which means, unnecessary fear is weighing off, right? There's a clear path to it. And then we see all of this from the reflection of our VIX. Our VIX is dropping. Fear gauge index is dropping. Let's go to the chart so that it's not just me waffling here. It's not just me waffling here. 8. Right. Excuse me. VIX. Right, so that is volatility, S&P 500. You just click on that, and you'll see. I'm pretty sure. There we go. So now, when I taught you guys this stuff, I'm on the weekly time frame. Let's go to the governing time frame first. I told you that anything above 30, right, is crazy. It is just stuff that's hit the fan, right? Absolute stuff has just hit the fan. It's just not a good time in the market. Fear is at an all-time high. Volatility is at an all-time high. Things are just absolutely insane. And we can actually historically look at where this was, right? So this is your fear gauge index. We won't go too far back, but this is 1990, right? When the year I was born, right? No idea what was going on there. But if you start to scroll through, well, technically speaking, this was the age of neoliberalism. They just, they're working for a new financial system within capitalism, right? I do know what's going on, but it's not that important right now, right? And the next time, I'm looking at the next time when these candlesticks close above 30. This is that the great 2000 tech boom, the year 2000, that decade when tech boom exploded and markets crashed, right after IBM. Microsoft was a big thing when Silicon Valley was a big bubble, right? Big bubble exploded in the year 2000, right? So that was a big boom. You can see fear gauge index went above 30. The next time that happened in the history of the market was Mama COVID. No, sorry, 2008 financial crisis, right? We know the big liquidity crisis in 2008, the banking, housing crisis. You can see price shot up through the 30 month, right? And with candlesticks opening and closing above the 30 in 2008. After that, right, the recovery slumped. Then there was the 2018 crisis somewhere in here, or somewhere there. I don't know where it is. Okay, somewhere there. So but these ones I like because look very carefully at the candlestick formation. We just have wicks, right? So for me, there was fear, like very maybe tumultuous weeks, right? But the monthly candlesticks for most of these type of candles close below, right? This is just long wicks, which is fine. So the last time we had a big actual candlestick formation outside of the 30 range was in 2008, then again in September 11, right, in 2011, and then, sorry, 2011 September, and then boom, COVID, right, above the 30 area. This is March 2020 COVID. And then with, recovery, blah, 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 and all of a sudden this year, 2022, when there was a war and all sorts of things, we started to flirt again above that 30 line. But if you look carefully at the candlestick formation, now that we can look at this stuff historically, we know that a green candle opens at the bottom and closes at the top. So April was one of the crazier, most volatile moments, this year. And then we know a red candle opens at the top and closes at the bottom. And since then, price has been slowly but surely coming down, right? So my whole point here is your fear in the market is dropping drastically now, especially now with the CPI data, and all your stocks are starting to recover, which is interesting because from a professional perspective, I want you to know this. Whenever you see the VIX fall like that, it also means, right? It means all the things I've said, but it also means the demand for hedging at an institutional level, not just like for us retail traders, but at an institutional level, the demand for hedging for future volatility has gone down. The demand for smart money and institutions and banks and investment firms to be using a lot of capital to protect their investments has gone down, which means we move from a risk-off sentiment to a risk-on sentiment. More money will be pulled out, not from protection, and will be put into risk-on things. So stocks, crypto, all those things that grow and move quite quickly, we're going to start to see some flow of money. And we have in the last week, right? We literally have seen, incredible bounce backs, etc., etc. And this means, a lot of institutions are starting to feel comfortable. They're quite clear on the path of the Fed and all that kind of stuff. And the reason for that, like I've said to you guys already, is fundamentally because, markets believe that, well, there should be no reason for a drastic interest rate hike because of what CPI said. And I've taught you guys to come here once in a while, right? The Fed monitoring tool on investing.com, completely for free. You just come there, you just kind of like have a look. We know that the last interest rate that we had put the rate at 2.5, right? 2.50, etc. So if you look here, you'll see the next FOMC meeting is 5 weeks from now, and 70% of the market speculates, or 69%, pretty much 70% of market participants believe that the next rate we're going to get will land us at 2.75. Remember, the rate is currently at 2.50. So between 2.75 and 3, which means people are expecting anywhere between 25 basis point and 50 basis point, right? They're expecting a decline in the hawkish speed that the Fed was coming in, and that's good news for the stock. They're no longer coming for demand. We might actually start to see some growth. So we're going to have pre-rallies, right, all the way up until we get the rate hike. And that's an interesting thing to kind of like keep track on. Keep track on this as more data comes out. Keep track on this as more job data comes out, as more CPI data comes out, because this is bound to change, either to accelerate so more market participants believe that, or to drop based on the data, right? But that's essentially why. So a lot of people are declaring peak inflation, and we're gonna be watching this midterm, this 5 good long weeks to wait, and kind of like trade off that stuff. I want this to be clear before we go to the charts. Now, I don't know if I am a true believer yet, and me, it takes me forever to change my mind and stuff, but I do want to follow data. I also want to give you guys a very balanced approach, all right? Because it's very important that you kind of like stick with a very balanced approach when it comes to your own money. Now, if stocks do a relief rally, we've seen this many times before. For example, here's your good faithful NASDAQ. Let's just pull out the chart that we use in the war rooms that's already marked up quite well. You will notice that this is not something new, right? It's happened before. We've had a 2-week relief rally in March, right? And I've spoken about this many times. But what you want to see about the NASDAQ chart, and really the power of 365, right, is the fact that in January I told you guys that I really hope with all my heart and soul that NASDAQ comes all the way to these unfilled orders of the 2020 COVID demand, right? And I think we will one day. All right, and it's very unpopular to say such things right now. I understand that. But I told you that during this decline, no matter what happens, NASDAQ was not going to stop anyway until it completes the beginning of this channel. All right, so we drew governing demands, weekly demands up in here, and that's really where price turned. That's where price turned. What I am worried about, as usual, is where is price going, all right? Because for me, that's where my money is. For me, that's where my next big moves are. And NASDAQ, despite all this good news, despite all this risk-on sentiment, despite the CPI data on the table, NASDAQ is fast approaching an area in the charts where a lot of people lost faith, where there was market capitulation, where there was selling upon selling upon selling, where the pressure to destroy the demand was right. And that's in March, where the Fed starts to increase interest rates to help inflation. Now, guys, inflation dropping, CPI is pointing to that, right? That is dropping. But let's be very careful. Inflation is still very high. Inflation from 9.1% to 8.5% is a drop. But having inflation at 8.5% and a Fed rate at 2.50% is not mitigating the problem yet. All right? I'm not trying to be pessimistic. I'm just saying, don't smoke the cocaine all the time. Don't follow the media all the time. Think about this stuff thoroughly. Where is price heading to? All right, so we can see here, we've got a bullish engulf setup on the governing time frame. So that's quite significant. A lot of buying power there, right? And that buying power, once again, was in anticipation of what I said was going to happen, where price is going to demand. I am not a heavy buyer in this market right now. I'll tell you that up front. I was a heavy seller. Right now, I'm really not a heavy buyer, right? But we'll discuss a couple of setups. If I'm not mistaken, by Monday, Tuesday, NASDAQ would have cleared the final supplies in the way, right? There were big supplies, daily supplies here in the way, running out of this, CPI opium, right? Hopium, the hope of a better future, right? I'm pretty sure price is gonna, extend itself through. But I am worried about this clean break of a channel, creating a very big governing supply, which I know for our trading strategy tells us that there are unfilled orders of sell orders ready to push price down. Do not be blind to that. Buy this week if you have to, but just be very careful that somewhere along the line you don't get caught with your pants down, right? So that's really my point. But maybe before I start to give a breakdown of trade signals, I want to show you something, because I remember I did tell you guys that no matter what happens, my voice is bad, blah, blah, blah. I will do my best to read the CPI report that came on Monday, and I'll share some findings with you, and we'll have a war room, around that kind of stuff. And I lost my voice, so, that actually never happened. But this is it. This is the, the CPI consumer index that dropped on Wednesday. All right. So I've broken down and extracted important parts in the report that I want to share with you. Right. So the first thing that you really need to focus on is a couple of things. Number one, we're looking at the change of price, right? So CPI is looking at the change of price month over month. And I want us to ask us a very big question. The big question is, why did inflation peak? Why did price drop? Have we spoken about it in different ways in the war room? The answer is yes, we have. I have tried to bring this to you many times. In fact, as 365 in the public telegram, we have taken a couple of trades on this trade idea. Look at this. Crude oil. Remember, for a while now, in the last 2 to 3, 4 weeks, crude oil has been below $100. Brent oil in War Room 75, I have it right here. I spoke to you about Brent oil last week Sunday, just about 5 days ago, 6 days ago, was also below $100 per barrel. And we've been projecting that since the hit of this big supply that we're waiting for, oil would have to drop. And that's what oil is doing. Now, if you look carefully at the CPI data, this is how we marked up our oil chart in War Room 75. Please have a look at that. If you look at the weekly time frame, I told you that markets were going to have to come back and tap into that supply. And that's all markets did this week. That is literally all markets did this week. This is an incredible trading system. Very accurate. So markets came back into this bearish engulfing pattern. You can see, and this is what we're looking for. And if we move into the daily time frame, we are now waiting to see if any of our sell orders are going to be triggered. If market can quickly accumulate and then redistribute correctly, we might be in for a bigger sell. But the bigger point is right now, price is at $91 per barrel. So the price of oil has been falling gradually. But the CPI data is for the month of July. The CPI data is for the month of July. The last time I looked at oil for you, I showed you guys the oil range and all that kind of stuff. Let's go to the first day of July on this chart. Let's go to the first day of July. This is June, July, June, 28 June. There we go. This is where the month of July starts in the chart. I want you to understand this stuff. I want 3-6 people come to this channel to really think through markets deeply and understand what on earth is going on. This is on the 29th of June, right? There's a supply created here, breaking off in pattern, and on the 4th of July, it is triggered and markets fall. We spoke about this. We took all these trades. It was an intraday trade I put up on the public Telegram group. We've been trading oil down, right? So it's not new to those of you who come to the channel all the time, right? So this is perfect. So now, when CPI data comes and says inflation has peaked in July, the previous month, we're in August now, I wanted to ask why. Well, what caused it? And this report is profoundly naughty and very interesting because, you know, the devil is in the details. Check this out. Check this out. Look at this. The only reason why inflation peaked, the only reason, ladies and gentlemen, is because all energy is down. Fuel, oil, motor fuel, gasoline, everything in the world of oil is down. And that was the 100% contributing factor to a low CPI reading. Inflation is an across-the-board problem. For inflation to completely be cured, yes, we want to see gas down, oil down, but we want to see food down. We want to see rent down. I want to go back to buying my clothes at a perfect price. I want to see noodles, ramen noodles go down too, not just oil. This makes sense because our supply and demand strategy told us a long time ago that the price of oil has to fall now because markets had arrived and covered in supply. So the only reason, I guarantee you, if you read this thing carefully, not only teach you this stuff, something, please be careful, understand this. The reason why CPI data is falling is because the massive contributor to the falling of this thing is actually energy. The cost of energy is literally why. Now, but energy is completely external. Do you understand that? Right. The Fed can't print more oil. The Fed can't print more oil components. What the Fed can do, what the Fed should do in every single country is to create policies that actually regulate oil. But they don't do that. In fact, oil is run by, you know, a small OPEC mafia, right, through the laws of supply and demand. They restrict the supply of oil to increase the price and the demand for it, right? So as long as they're not fixing the policies and trying to control that, the Fed can do nothing about this thing, which means oil is a weird component to look at to base, you know, your whole reading of inflation data. I'm not buying it. I'm just, as a researcher, I am not allowed to think like a sheep, right? I have to get critical with this stuff. So just be very careful, right? Because the price of oil can still go up, right? As soon as we hit, you know, significant demand, the price of oil can still go up. Now, our trading strategy tells us, when you're looking at supply and demand at oil levels or any particular chart, your areas of value are absolutely important. So this governing supply on oil, first of all, is what we call an MTP. If you don't know what that is, once again, hit that link that I showed you about, register for the course, because an MTP is a specific type of supply and demand. It's a major turning point. Now, we have a fresh touch and we have a demand very close by. We have a demand at about 77 US dollars per barrel, which is where I think oil is going. So the first time I'm going to start exiting out of sell trades is around there. I'm going to hold myself up until there. There are multiple demands along the way that are going to create, you know, a pump. Like right now, we've hit a daily demand, which is what created a nice strong retracement back into that weekly supply zone. And I'm hoping to take another entry there, which is the one that I gave, right? But it looks like price already ready to sell off. Business inversion engulfing pattern. I don't have a pending order that early, so I'm really hoping that we get spiked in somewhere up there. But if not, we shall see how the price goes. But I expect the price to continue onto the downward path. Now, that's the oil part, the external component of that part. But there are a lot of things around this oil thing. For example, the entire narrative at the beginning of the year was inflation is high. It's going to, you know, cause recession because of Russia, because of the war in Ukraine. All right. So that was the problem. Oil went up because of all that kind of stuff. Fine. We agree. We believe that. We saw it for ourselves. But you can't then come around and say, well, oil prices are down now, and that's a good thing, and it's because of us, right? You can't act like it's because of you. You were never the cause of it. The Fed does not control the price of oil. I think that's my big point. So watch out for that. Now, the last thing I want to bring up to you in terms of this report is in terms of check out the food price. Let's just bring up the report as quickly as possible. Then we're going to move on to the signals. Those of you who just want to trade in signal. Look at food. Right, so this is CPI core. Remember, there's CPI number and there's CPI core. CPI core talks about the actual inflation reading minus food and energy, because food and energy are the most volatile things, etc. And you can see for yourselves that when we're talking about food and energy, there's an interesting thing going on there, right? Look, if fuel gets expensive, you can walk, right? It's not practical advice. I'm just saying you can get a bicycle, you can get into an Uber. If you're in Grahamstown, you can jump on a donkey. You don't always have to drive, right? You can get on a bus, whatever. If fuel gets, what you can't substitute, what you cannot stop doing, you can stop driving if oil prices are too much for you. You cannot stop eating. You absolutely cannot stop eating until we see a drop in price on basic commodities, on basic foods. Inflation is still crazy because you can't substitute eating. You can't say, screw it, you can say, I'm gonna sell my car and Uber for the rest of my life. You can't say, I'm gonna stop eating because you're gonna die, right? And that's a very big thing. Now, oil is down, but food is still up. Why? Why? Because Powell has built himself a cage. He's inside a cage. He's in a cage fight with himself. The cost of food keeps going up because Powell is right about labor. Labor is doing well. People are getting hired. Wages are going up. Companies, to offset higher wages, remember, if you're a manufacturer and you have people working who make food for you and they keep getting a slight increment in wages, which we've seen in the NFP data. It's not Leroy's emotions or feelings about it. We've seen in the data that wages keep going up month over month. In the last NFP, wages went up again. A capitalist is always going to be a capitalist. A profit money monger is always going to be a profit money monger. Simple. So for companies to offset the price of increasing wages, they have to increase the price of food because they have to keep maintaining this high labor cost. And until there is some type of balance there, that is that wage spiral problem I spoke about in the channel. Now, so please, these are small things that I want you to look out for because no one's going to bring them up. And by the time they come up, it will be in hindsight, right? In hindsight. And when you do things in hindsight, there is a fundamental problem, right? So now that we've done this big wrap up, let's fundamentally then look at a couple of charts that I want us to look at, the one that I spoke about today. Right, and just before we do that, please don't forget, if you want to master supply and demand, institutional trading, high probability trading setup, the type of stuff I'm doing right now, don't forget to check out this link down below here and record and join us for your private classes, your mentorship, your structured course already done. We just get everything to you immediately as soon as you are enrolled, and we can start you on your journey. Right, so the first chart we're going to look at today is obviously EURUSD. We've spoken a lot about EURUSD. I love my EURUSD. I've explained why I love EURUSD. But the CPI push and the risk on aspect of the markets, the switch, is now finally pushing these charts to very comfortable levels, right? To levels where we are almost very close to where we want to be, where we've been waiting for price to arrive. And we did have a red day on Friday, nonetheless, but overall, we had a very beautiful pump to the upside. And those of you who know as a swing trader, I have been waiting and waiting and waiting and waiting, since pretty much the beginning of July. So it's almost 30 days where price dropped and now slowly starting to make a slithering recovery back to these areas. I've been waiting for just under a month for markets to come back to these supply levels because I absolutely believe there is something to be gained from there. What I've done now in front of you is I've switched to a Kinihashi. I'll show you where the breakup structure is, the BOS. I am looking at some significant trend line trends, right? There's a switch up here. Nothing that I'm currently worried about at the moment. One would draw it like that. One would try and look at the overall trend that looks something like that, right? So I am trying to see what price is going to do. If the risk on sentiment is overwhelming, right, then we might get an interesting price action in the few days to about a week to 2 weeks to come. Right? But right now this is where we are. Now with the Kinihashi, it kind of like tells us that first supply that you're looking at, while valid, might not be the best option. And I say this all the time, right? When you're selling, want to get the higher supply. When you buy one, it's the lower demand. But many other times as well, markets can choose the lower supply if it's high enough in their rating grid and leave you behind. So sometimes you hear me say, I'm going to put one penny order here and another one there. If I get stopped out here, I'll get triggered up there. Sometimes I won't. It just really depends on the chart. One of the things that I'd like to do today with you is to then kind of like assess how far are we on the trend, and simply by pulling anti-fib Fibonacci lets us know where the the prime retracements are in price, right? So I'm using first of all the Fibonacci on the daily, right? When I use the Fibonacci on the daily, this is what comes out. My golden ratio is where prices are already showing signs of resistance. I'm not a support and resistance trader, but I definitely can see that there is what traders refer to here as a resistance, which would explain Friday's retail trader down day, right? So on Friday, a lot of people started to sell at these levels at the break of structure, blah, blah, blah. But if they're holding those sells on Friday, Monday, Tuesday, I'll not be surprised when stop losses start to get hit because price should come a little bit higher. So that's my take. I don't think markets are ready to sell off yet. All right, number one. I don't think this is, I definitely agree that there's a lot of sell pressure there. But let me put it this way, it is not a safe place for me to sell with my trading strategy, right? So what markets have done is they've repositioned themselves, put a breaking off pattern, which is fair. Once again, as long as markets arrive at a golden ratio, right, all things being considered, what that means is markets have retraced 61% up from its last turn, right, which means there's now a premium selling point, which is now this asset is now valuable enough to sell at a high point, and they believe that this might be the highest point, hence the breaking off pattern. If I don't see significant sentiment difference, and this is where that scenario analysis is going to play in that I can't do with you right now. This is also where if you're empowered with the entire course, you can then take these trades by yourself during the week without me. Because right now, I have EURUSD is a wait and see type of thing. We have to wait and see to see what type of distribution we're going to get on this area here on the lower time frames. That's number one. We have to wait to see. And the only people who know how to do that will be 365 registered students because they put the entire course and they follow my stuff religiously. If you come to my 1 hour chart, my intraday trading chart on EURUSD, it looks like this. And you can see I've already got this whole thing mapped up here on the 1 hour time frame. This is what the stuff that you see on the day now, this is what it looks like on the 1 hour time frame. EURUSD climbed all the way up and it's coming back down. Coming back down to what? I made social media posts around this. This is Wednesday, where CPI data, the anticipation of a peaked inflation ran crazy. And markets ran wild, unmitigated. There was no order block mitigation here. There was a strong demand that opened up at 9 a.m. in the London session. So what I won't do this with every single chart. Like I said, I'm going to do a scenario analysis of these 5 charts during the week for you. But if you start to see your price is fractal. Fractality talks about how price moves from different time frames, monthly, weekly, daily, H4, H1, 50 minutes. You'll see that on the H1 time frame, right, markets are slithering, right? They literally broke to this H1 demand, right? No one cared for that. No one bought there because we knew that the real demand is the CPI opening. And now we want to see how price is going to move. This is where markets close. We've got the Asian session, which is going to be the first 8 hours from like 11 p.m. throughout midnight, right? And markets might move down, might move up, might move down. And we want to see the opening of Monday London session. If the opening moves up like that, which there is a fair reason to think that it would, versus it coming down there, then this would create a green daily candle for Monday. Poorly drawn, I apologize. Right, a green candle for Monday, which would technically be retesting the bearish engulfing pattern you just saw on the daily time frame. I just moved from 1 hour back to daily. I hope you're with me. Once again, somewhere down here is a 1 hour CPI demand. I'm telling you that this needs to happen. Right? So this like this, right? Something like that. And if we take that into consideration, let's just draw those lines and then go to the daily time frame on this particular time frame. You will see that it will look something like that. Maybe. Let's see. So go to the daily. Zoom in a little bit. So drop to that CPI and back into here. Right. So this is why I'm saying I want to wait and see. But if you're not really empowered with the type of information way we trade, then you really want to just wait for the big swing, and the big swing is right above. But there is potential to make money if you know your scenario analysis traders this week, and you really have to watch for this. Now, let's look at this EURUSD chart carefully. We've had multiple bearish engulfing patterns, right? When governed coming from an uptrend. Watch this very carefully. Don't forget the basics. Don't forget my module 1. The governor is always right, more right than anyone, more right than Biden, Powell, Forex Prophet, Guru, whoever you're following on Instagram. The governor is always right. When the price left a governing area, a majority of demand, a big, strong, significant demand. This is a governing demand. That price is leaving. That price made contact. These are the governing time frame, right? When markets were leaving this red zone here on the monthly time frame, we expected green. Where is price going on the governor? Somewhere up here. Somewhere up here, we expect markets to make contact because this is very important. Now, the area of competition is quite thick, right? That's why between these two white lines I've just drawn to you, I hope you can see them. I hope you can see them. Between these two white lines, which is the area of competition, there are multiple daily supplies stacked up in there, which you need to be careful about. I'm wasting so much time on EURUSD, but if you understand this, you'll be golden moving forward. Now, and you can see that the first area of competition, the month of August has already made contact with and is already falling. The first area of competition, the month of August, has made contact with and is already falling. But as price was leaving a governing demand to go back to a governing supply, if you come back to the daily time frame, I want to show you this trick. Be very careful of this, traders, especially 365. Don't forget the rules. You are nothing without your rules. Your trading is nothing without module 1. Keep watching all my module 1 videos until you sound like me. All right, it's not to drive my ego, it's just to say master that stuff. Now check this out. Look carefully at what's happening to these bearish engulfing patterns on the daily, because they are bearish engulfing patterns, but the person in charge is the governor. As price was forming bearish engulfing patterns throughout here, right, you get the retest. The green candle that I just told you is most likely going to come on Monday, but markets then continue to break it. And then you'd get a retest. Instead of price coming down, markets will continue to break it. Which is to say, if you have a small account, you're not sure what you're doing, wait for higher sell setups, because the presence of a temporary bearish engulfing pattern on the daily right now does not negate the fact that price knows where it wants to go. Right? Just a delay on the overall plan by 1 week is not a big deal to me. It's not gonna change anything. Sorry about that. Right, because markets understand where they need to go. So this is an intraday trade, right? Our bigger trades are somewhere up here. Now, I obviously have serious issues in this area because now there's a better supply all the way up in this interesting cluster there, where it started off as a Talitha area and then ended up as a bearish engulfing. And for me, one more time, just to be very clear, I will have a pending order here, no matter what, whether it gets hit or not. I don't care. I know how to risk appropriately. And I'm going to have a 1 up there in the event that this area is the one that's spiked in. We like both these type of setups, but this one is even more encouraging, right? The complicated 365 candles, or what we like to call a counter trend, which is used to drive price up to get a premium sell to bring price back down, right? So it's all here, right? And there is more supplies further up. So these ones will have to interrogate them when we finally get there, right? So this is what I see in EURUSD, right? Don't ignore this if you know what to do with your scenario analysis, right? And you know because you've done the work, you've mastered it, you've learned it. You've watched the 2 free YouTube videos of mine on scenario analysis. Then you've also gone through the course to know the different types of supplies and demands that are going to, incubate you on the smaller time frames, throughout this whole period. But this is something to watch out for on EURUSD. Moving on, EURJPY, and I'm not going to do intraday explanation on EURJPY. We're just going to stick to swing trading. Otherwise, we're going to be here until midnight, right? So EURJPY, let's start all the way back. Let's go back all the way back. Let's understand this chart, right? So we had, what we kept calling for as monetary policy divergence. Interest rates are going up in euro, pound, dollar, but JPY is not doing that, right? Because that's how the economy works in general, right? The long fundamental story. So anything in front of JPY is bound to be strong right now. It has been strong for almost a year and a bit more. We've been seeing these uptrends in all things, something JPY. But all good things come to an end. And so we marked out a supply where price was. This is it. This is literally the course. You get to know where price is going to turn before price turns. It's not that I'm good. It's because I've mastered the rules of the game. It's not, I'm not talented. I'm not better than you. No one is, right? It's just understanding knowledge, right? My people perish due to lack of knowledge. Your accounts blow because you fundamentally don't know how to manage yourself, and you don't know how to manage your trading, and you don't know what's going on in the market. So it's all around knowledge, right? So please click that link. But here's an important part. Markets arrive very strictly at an area of value. You can switch to Akini Hashi and you see for yourself how big that area of value is, right? So that's really the total supply, right? Do something like this, right? That's kind of crazy, okay? But yeah, so we choose that area, and markets drove as much as they could, and all of a sudden price is now starting to fall, which to me signifies that, you know, smart money might be, you know, very happy with what they've done. We do not have here a bearish engulfing pattern. That's important to note, but we have it on the month before, right? So this is under normal candlesticks. So let's say you don't like how markets didn't fully touch this, blah 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 blah. What are you going to do about this now? It's on the governing time frame. Then you don't like it, I hear you. But what are you going to do about this now? This is on the governing time frame. This happened. This is how the month of July started. The month of August is already engaged in that area of value. And you can see here, we've written here, daily demand number 1, BOS. There's already been a break of structure. So now already price is starting to print lower highs. Okay, that's what that means. Right, so let's dial this whole thing back. Weekly time frame. This is what the weekly time frame looks like, and to me, it looks like the weekly time frame also printed another big old fat order block, and has done a good job of maintaining that order block. And EURJPY is no longer really preaching monetary policy divergence, and now actually have a price pool, and potentially very soon, if markets were to break a little bit lower here, very soon would even be talking about a change of character in price, right? So just be very mindful of that kind of stuff, you know, moving forward. What's going to happen? So the weekly time frame, I don't really see anything, you know, any serious play unless you're already in the trade. I can't see anything to project the future into, so for what we can take moving forward. On the daily time frame, we can now remove this because we know it's broken. We can leave the nodes in, but we know that this whole area now has been violated to the fullest, right? In fact, maybe keep this in for now, just so we know where our cards are. But even this area that I've just drawn in front of you right now, that area is in trouble. That area is in trouble. It does not meet a very good imbalance standard. In fact, markets engulf back in, so sellers try and push back in to get you know, another lower buy. Then a lot of buy orders that they use to kind of like supplement this whole thing. And this is not a bullish engulfing pattern right here. You can see the green candlestick does not engulf the red. Right, so this area is just in trouble. It's a big mess. You know, let's go to Akini Hashi candlestick swap there. Yeah, it's just not something to really, you know, hold. You know, when price comes back the second time, be very careful about that. When price comes back here the second time, be very careful. I want to repeat this. Buying here is dangerous, very dangerous. Right, so you can see selling pressure very strong, right over there. And then markets make their way back in. I'm now on the daily time frame. I'm just trying to keep my areas of value as clean and as clear as possible, right? I wanted to argue with something that looks like this. And I'm pretty sure if I go to Akini Hashi, I'll get a confirmation. There we go. There's the green, which is the top of my pick, and a doji, and I leave it like that. And my area of competition, if you're in this trade already, good for you, right? I'm not. This would have been so beautiful, so beautiful. It's pretty much textbook, right? Supply and demand, pretty much textbook. And Akini Hashi is asking us, maybe consider, you know, waiting to sell somewhere there. Maybe consider that. That's what this is saying. Let's put a normal candlestick and see what's going on. Right, normal candlesticks make a slightly similar argument, and that argument is, well, we've created a bearish engulfing pattern for you, so that's another new strong supply, but it's been tapped quite heavily. Almost looks like it's broken, but it's not. But it's been tapped quite heavily, and markets are flowing down, right? So you could wait for something like that, but you might not get it. So who's the best person to talk to? Where you got a break of market structure? We already got a supply that's engaged, so we need a downward Fibonacci, not an upward Fibonacci, but various territory. So I draw my Fibonacci from that point there all the way down there. Once again, Fibonacci's are drawn in a specific way. I have a lot of free lectures around how to do these tools, right? So there, right? Those are my latest swing. There's my golden ratio. I love it. Look at what my golden ratio is. Look out, right? That's all. Simple, right? So now I'm like, okay, fine. Maybe play for the immediate, right? Let's see what's going on. We'll see what the sentiment looks like this week, etc. But this is becoming an interesting, area of value to focus on, right? The areas, it kind of looks fresh, kind of looks like it was engaged, just a few days ago, right there, right? So markets literally came in. This stuff, guys, this stuff is so amazing at how simple it is when you know the rules and how consistent it is. I'll repeat myself. Supply and demand trading, the one that we practice on this channel, is amazing in its simplicity after the mastery of the rules. Number one. Number two, in its consistency. So you're not coming to the charts expecting some random, right? You just want consistent setups. I don't know. I always ask this question. I never get a response to it. What do people want? How else can I package this information that you feel will be best for you? How much more of my time do you need? And I'm not complaining. It's a genuine question. Comment down below. Do you need a midweek, a war room? What do you want? Like, you guys don't talk to me on the channel. Talk to me, please. Comment so I can actually start to incorporate these ideas. How best can I reach the conscious mind while you work on your subconscious mind to better your trading? I want to help you master your finance, my purpose in life, right? So look at this, very clean, order blocks, very clean supply and demand transparency, very clean trade. Swing trade idea one, swing trade idea two. This happened on Wednesday. As soon as CPI came, started to fall. And as it was falling, what did it do? Just do what I just did like 4 times. There you go, another one, right? And you really want to watch out for the second one because we know that our golden ratio area is here. Right? We saw it when we drew a fib. So I'm going to put it in because I don't want to make the mistake of being greedy and in a rush to choose the wrong area of value. We've got this area here which absolutely could just rock your world and drop price straight from money. I agree with that. It's not a premium supply, it's not the highest supply, and it's not necessarily a golden ratio area, but it matches everything else, right? So if you wanted, you make the argument that there is our area of competition for this golden ratio, and that's what price is doing right now. Because of that, you might want to sell. Who's going to get the best entries? People who mastered scenario analysis, because you're going to see price formulate on the 1 hour time frame at the beginning of London session and the New York session, right? So for now, I'm just giving you these plays, right? But you need to then dig deep and find your entry, right? You can go to H4, maybe you might like to find an unfilled area of value and claim your stake there. This is H4, not making this up. This is H4 inside the very first daily, the golden ratio daily. H4 supply, and it looks good unfilled orders, and it's higher. So you know me, I would rather let price leave without me than price trigger me to kick me out. There's a difference. I would rather let price not make money than be in a trade for the sake of being in a trade and lose money, right? So there's a higher supply on the H4 time frame embedded inside, that daily golden ratio area, right? See there? There's that H4 supply somewhere in there. It's there inside that golden ratio area. It's all there inside this double cluster there, right? Now, if I go back to H4, there's obviously this area right there as well, where to me it seems like markets have already tried to mitigate, right? Depending on how you draw your areas of value, your area of competition, but there's definitely a touch there. All right. Now, if markets want to create a liquidity grab, wanna mess with you, right? Then you're gonna get something that looks like this for a while, and then stop that, then boom, bam, right? There's a possibility, or you could get price just dropping from that level. What is EURUSD gonna do? I'm gonna wait for the higher supply. I'm just gonna wait for the higher supply. That's what I'm gonna do, right? You do what you wanna do. I'm gonna wait for the higher supply. Next one, pound JPY. La, 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 la. I'm looking at our governing time frame. The governing time frames tells us that pound JPY still has a long way to go, right? Up. We are going to consolidate again, and we're going to go up. Why? That's what it does. Well, first of all, because we have prices going somewhere to supply. Number one, we can see that markets can range for, this is a governing time, can range for months, can play with you, and it, excuse me, and then explode to the upside. And that's what I think is happening here. Markets are going to consolidate just for a little bit again, but the destination is somewhere up there. The destination for pound JPY is a little bit higher. After clearing supplies, we've got some clear cut. In the weekly time frame, we can see that markets have tried to be creating these equal zones, right? Creating some type of liquidity up there. So eventually that's going to come to play. Eventually on the daily time frame, it looks the same. Look at our buy to area holding strong. I am already out of this trade. I'm just saying it just looks pretty. In the previous war room, I told you guys that I was going to do nothing at these levels. I was going to do absolutely nothing at these levels down below. So the last time we looked at pound JPY in the war room, if you want to just double confirm that for yourself, I have my well-organized trading journal here. Was in war room 73, 24 July, and I still have it here written, waiting. But wait, I'm waiting because I don't want to trade at these sharpy levels here. But very unclear. I would rather risk money at a retest of 5.2. I would rather risk money at a retest, right? I say risk because, you know, markets could find this area a little bit weak and stop you out before it goes up, right? And then if this gets taken out, then we know it would want to. But I'm not buying pound JPY here. I'm repeating myself just to be clear. All right, so I would like to buy somewhere there. And I'm just gonna wait and wait. But everything here, I find this very unattractive. I find it very reckless. And so I'm gonna wait. Just wait, I'm gonna wait. Why? There are many other things to trade right now. But in the meanwhile, we should probably address the elephant in the room. Those of you who are desperate to trade this asset, you really should be looking at the type of sell pressure it's exuding right now. So, you know, look at your mayoral time frame. You know, I can see a PCP on the weekly time frame. I can see a, you know, a fresh dolphin. Maybe just maybe push. But be very careful. Where I want to buy, there is no bigger confluence than daily. That's why it's a high risk. Where I want to buy is just off market memory, where I bought last time and made money. So I'd like to see a rerun of that and potentially a retest of this outside trend line. So look at this carefully. There's kind of like a confluence. That's all I have. On the governing time frame, my buy to, where I want to buy to, look at it very carefully, is technically on a bullish engulfing governing time frame. Okay? But it's been tapped once with this candlestick in May. Number two, it also would make contact with an outward trend line. So I'll finally get to retest that markets have broken out of this trend line like this. Look carefully, like broken out and then do a retest and then go back up, right? Outside of that. So this is kind of like the things in my flavor right now. But I don't have like a confluence order block, governor, weekly, daily. On the weekly part, we don't have an order block, but on the daily part, we have an order block that we've already used, right? So I still think price is going to move. I don't think it's smart to buy it. If you're very good at your levels, then you can look for some sell setups. I have no interest in buying or selling at these very competitive, thin liquidity levels. Guys, by the way, who is in the markets right now? Does anyone know this? I mean, I teach on this every now and again. We're in the third financial quarter. Most fund managers in the United States, in London, I'm talking about the biggest liquidity providers in the world, which is America, really, are on holiday. You know that, right? So this is where I make the most money in the third financial quarter because there's less competition. It's just retail traders and some institutions filling up and clearing up some old orders. Most people are on holiday. So when markets are thin, be very careful. Be very careful. You all of a sudden start to get this new wave of long wicks. So thin liquidity creates for such moments, right? In the third financial quarter of the year. It's a good time if you know what you're doing, and it's a terrible time if you don't know what you're doing, especially on smaller time frames, right? So be very, 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 very aware of the fact that the financial quarter is got a lot of thin liquidity, right? So that's why I do avoid such areas, right? I do avoid such areas until there's big money flowing in. When people are now fighting for their bonus checks in the fourth financial quarter, we're gonna have a party. But make hay while the sun shines, obviously, right now, if you know what you're doing. Right, Euro Pound, our next chart. Ah, I love it. I love it when a good analysis comes together very well. Right, so this is Euro Pound on the daily, and I'm taking some of my old intraday trade analysis on this chart, which you'll see. We spoke about this many times, which I'm just coming back to stuff. Remember, last week I spoke about when my voice ran out, where there were many pending orders that were on the waiting list. They were to come back and check now that CPI has come up, see if they are valid or not. So that's what I'm doing with this forum. Right, there's some valid areas that we should now come back to. Pricing off and pattern cleared in July. We spoke about it. Prices are going to come back to it. Prices come back. If you look very carefully, this is your area of competition. I just draw a line straight through from there to there. You see this, guys? I've just drawn a white line on the monthly time frame. Watch confluence work. Watch supply and demand work wonders. Watch our area of interest get tagged. I'm talking about the area of interest we spoke about in War Room 74 on the 31st of July. Right, so markets have finally returned. I hope you are triggered in this. I hope you're triggered in this on Friday, because I gave it to you, man. Right, so this is where we are. We're triggered. There's not much to do, but just wait and see how price will play out. With two options at the time I gave you this trade signal, whether markets are going to give us 3 red candles into this demand. If they did, we were supposed to buy up, but markets didn't do that. Markets didn't come back down. Markets did an original turn. Was it original? Yes, they did. Markets did an original turn halfway through and went up. When markets do this, for me, it's always a clear sign that the downtrend needs to continue, right? Because who's gonna fix all of this? So that's why I said, well, look to sell somewhere up here and somewhere up there. And our first pending order was triggered on Friday, so this is done and settled. Once price, if you're doing the 3 entry thing that I've taught you guys to do before, once price makes its way, almost somewhere down here, then just prepare yourself to take trade 1 off, right? Cover your costs for doing this business deal, selling Euro Pound. Trade 2, get as maximum R&R that you can. Trade 3, break even, and hope you can ride it all the way down here and definitely get out of trade 3 down there. So that will be my plan for Euro Pound, but you already have that in the previous forum, and I'm reconfirming it now. Pound USD, chart number 5. It's still too early to break even. We're in, but it's still too early for me, and it's still too early to break even. Not much has changed in the analysis. We are fighting a dangerous game. We're in a governing demand. All right, where anything goes. We are absolutely fighting a dangerous game. So please, as soon as you can, go risk-free, do go risk-free on the chart, right? My prayer, though, is that we fill this week. And I've told you guys this before. Euro is deadly weak. Because Euro is weak, all these risky assets are going to follow suit. So if you really think about how long will this hype around CPI and sensitivity and blah, 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 hope, we shall see. We really shall see. It's not a question I have an answer to. It's just something I really am interested in seeing, how prices going to react. But you can see down here, markets are inside a governing demand and have a mind of their own. That's done, right? On the weekly time frame, we just had a simple retest of a very high risk supply, because that particular supply was literally just outside of a governing demand. Just give me 2 seconds and I'll show it to you. Right, there we go. I hope I'm sharing the right screen. Yes, I am. Right, so look at that. So that's pretty much where the supply is over demand, which sometimes can be very much the one supply that's needed or used to actually break through the demand. We obviously had a green week this week, because as soon as CPI data dropped from Wednesday, this is Friday, this is Thursday, this is Wednesday, right? From Wednesday, price got some crazy relative strength. I was actually, a little bit boom when that happened, because I thought maybe we were going to get stopped out. But then Thursday and Friday happened and was sinking, right? All of this is in relation to how you're going to read the DXY chart, the dollar chart. The reason why I didn't get out of this thing is because my dollar chart allowed room for at least a little bit of these profits, right? So please don't forget that kind of stuff. Right, in terms of structure reading of pound USD, you can see it for yourself. I don't have to write you a long love letter. There it is there. Break of market structure 1, inside the demand area, break of market structure 2. And so now we're waiting to see what's going to happen here. Break of market structure 3 maybe, because if that happens, that will be very good for this particular trade idea. right? But it would be best. It's not a trade switch if we get zeroed out. It's absolutely a trade switch if we lose money. It should always be for you, right? Because of this failed, for me, this is interesting. Like, it's a very nice, interesting bearish engulfing pattern. If you draw a Fibonacci from swing high to swing low, you might actually get a 50% mark. Because of that, and Monday being around the corner, I would, suggest we break even here, just in case, and then see, what it do. Break even here just in case, and see if the supply will hold. If it does hold, then we can expect something, price to look something like this, right, and then to continue down. That would be great. But if it doesn't hold, you don't want to lose money because this is a supply right on top of the governing demand. So anything goes from there, right? AU 200 AU. Now, for some of you, your broker will have this SPI, right? I've got a broker that actually calls this SPI, and then some people have the AU 200, and then other brokers call it the AU 200 AUD. But essentially, it's the Australian index, right? It's the Nasdaq 100 Australia. No, it's actually the S&P 500 of Australia, the top 200 companies in Australia. And I'm just bringing it up because it's very important to learn to read other indices, right? The same thing applies. The same, flow of supply and demand institutions, but you really got to see a similar pattern. If you look at UK 100, minus a couple of candlesticks, the things look the same. Right, so this big drop here, we know what it is. It's COVID. This big drop here is COVID, right? And then markets did that, right? And etc. Right? So one would argue, and I want you to hear what I'm saying, because you want to understand how bad things are in the world. If you look at where markets closed, and I'm talking about the green candle opens at the bottom and closes at the top, right? So this green candle of January 2020 closed here. And then the red candles open at the top and close at the bottom. The red candle is now February of 2020. If you really look at what this chart is telling you, the Australian index, it is saying we just got back to the levels that we were of January 2020 as an Australian bank, as the entire best 200 companies of Australia. They literally have finally gotten back to some type of profitability, scalability of 2020. Now they are only starting to recover from that crisis. I'm not talking about the fact that AUD, for those of you who don't know, is very much linked to China, which seemingly is trying to start a war. I'm not talking about that. I'm not talking about the fact that AUD, as some of you don't know, is very much linked to gold and minerals, and so the fluctuation of gold prices, gold dropping, actually affects, because China, AUD is a very big import-export relationship with minerals, right? That's what I'm talking about. I'm simply saying this chart is telling you that in 2022 August, price has finally gone back to at least where it was in January of 2020, right? For those of you who think recession and inflation are not real, you just consider these small factors here. Now, we've got price trying to sit above this area when this kind of like lasted for a little while, for a year, from August last year to August this year, or technically to June this year. Then markets fell below. And when markets fell below, markets were not really kind in their fall, right? So they failed to respect the demand and they completely dropped. And now markets might be looking to head there. This could be a possibility. And if that's a possibility, my question then is what could potentially drive price down there? Because when COVID was falling, when COVID was happening, and AUD was falling, remember gold went crazy during COVID. It was when gold went to like 2000, because gold was an inflation hit. Gold was a safe haven, but the index still fell. And I'm wondering what could happen now to push price down there. That's just my thinking brain. But in terms of trading this index, a couple of things are worrying. Number one, we did break through a demand. Okay, number two, we've got a strong supply sequence up here, holding the price down. Two bearish engulfing patterns, 1, 2, and then finally a let go. All right, so I can't see that much clarity on the governing time frame. So what I'm going to do is I'm going to then move now to the weekly time frame. Right, I'm going to move to the weekly time frame and see what else I can find there. Right. Not much either on the weekly time frame. I'm going to go at Kinihashi and see if I can break anything down. Right, so we've got a clean balance at this area here. Right, and then we've got some stuff up there. I'm going to switch to normal candlesticks, and I'm going to just try and tighten the screen will illustrate for you guys. There we go. So this is what we have. This is now on the weekly time frame. This is what we have on the weekly time frame. Complicated 365 candles for 2 weeks where markets were so bullish, and then all of a sudden a big fall. And this to me, the way those candles are set up here, this to me indicates like there might have been even a gap on lower time frames, daily H4, H1. There might have been a gap right there. That's some sell pressure to drop price down. And then I have to ask myself, what caused price to go up? That's kind of like my analysis. Why did price start going up there? So what I'm looking for is a weekly demand. If I can do that, I can then create a relationship between the distance and the journey of price. Where price is going and where price is coming from always tells me the trend. I mean, if I know the trend, and then that's the only way the trend becomes my friend. If you don't know how to assess a trend, the trend will be your enemy before the bend, right? And it's a stupid saying that we used to say, but it actually is very, very true. Right, we don't have a strong imbalance except for the fact that there's a gap there. There's not a bearish garbage pattern. Let's be very clear about that. Which means to me that this could be a trap. Right, this is not, I'm not excited about this setup here. Definitely could work. Definitely could work like that. But because of the lack of imbalance, I'm not even sure if this area would sell off, right? We do have, you know, a very much strong, you know, very, very, very well built supply here on the weekly time frame. And if you look to the left, when you're trying to find out what caused this supply, you'll start to realize that, well, nothing did, because this here potentially was broken by this. So there wasn't really a supply, you know, might have been memory, price might be remembering how high things were at the all-time high of the index, but this is really, to me, a broken supply there. So this is now a new reinforcement of that supply level, almost like a type of bandage. And this is something to watch out for. We shall see what is going to happen here, but I'm very much more prone and keen to wait, right? So we're still waiting to see if there's a gap in the lower time frames. But now the daily time frame from the zones that I've just drawn for you, you can see but a fairly good type of trend, a good type of climb, some clean version of, you know, upward momentum. Very, very, very good, you know, slowly but surely, you know, distribution of price in the daily time frame, which is important. Now, this is where when we're looking at the weekly time frame, this big cluster here is what we're wondering about price. On the daily, it looks even more convincing. On the weekly, it did not. So please watch out for these two areas, right? If markets were to first react to the supply, then how far would it fall? That's your first question. Where's your profitability? What's your risk-reward ratio? Not how much are you going to make, what is your risk-reward ratio? How much are you risking here? If markets were to do this, will it be like that? Or would markets first drop all the way down there? Make contact with this bullish engulfing pattern, make contact with this upward trend line incline, and will that be a trade you want to take? Right, so that's something to look out for. I don't mind risking money on this shot, but I definitely want to see what's going to happen, you know, when we get up here. When we get up here, that's going to be fun. Right, so that's daily time frame on AUD to you know, AUD to 200. Please, 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 please look at this, right? Two trend line touches, and the thing that broke the actual trend is the same order block that I'm telling you to look out for. Right, so please, 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 please do consider studying this chart, run your back test on it, get familiar with it, because you will run out of things to trade if things move the same way in your trading. So if you just always have one sentiment and you don't have an opposing hedging sentiment or assets that oppose the sentiment, you know, just there are more things in life than American indexes. And that's my bigger point. Right, so we've got 685. We have 6830, and that's good enough for me. 365 students, remember 365 numbers, we always allow for 25 to 30 points. Right, so we get the 365 number and always allow 25 to 30 points, and it's 6830, right? 30 being the extra point. We really got, you know, a good situation going on there, right? So it would be hopefully a sell and definitely a buy. So that's what I'll be doing in A200. Hopefully a sell here, hopefully and definitely a buy there. Right, we shall see where price takes us. Right, so next one that I said I want to look at is Russell. Sensitive midterm, you know, mid-cap companies are very important. And if it wasn't clear, guys, the thing I did with the introduction of CPI reports was a warning. It wasn't just me talking for fun. I was trying to warn you guys of seeing the dangers, you know, ahead of time that might befall on the market and other traders who are too optimistic about this inflation stuff. Right? I'm bringing this up because the Russell then becomes a very key tool. One of the first places you can start to really sense what's actually happening. And here in the Russell, if I can remove all these lines, we have what is known as a parabolic structure, a structure going up in such speed and intensity that it risks breaking its neck. Right? The parabolic structure is when prices just moving, you know, a little bit too fast upright, right? Not actually creating structure to support it. It's not creating, you know, some type of lower lows and all that kind of stuff. These parabolic structures are run for a while, but then when they run out of steam, they fall very sharply, right? So almost all of this becomes a fair value gap, right? Not really the way you're supposed to use the term fair value gap. I'm just simply saying all of this needs to be filled, essentially, right? So just be very careful about this. Right, so the Russell right now is having a very good recovery. We know why. CPI, you know, market recoveries, weekly and governing demand on the NASDAQ. Like, there's a lot of stuff that's been happening, but markets have finally arrived at a place where they feel safe to finally go back to their origins. But this is a similar situation that, you know, NASDAQ is going to be approached at very soon. Will markets survive the upcoming governing supplies? Will markets survive the upcoming governing supplies? And if the answer is yes, then that's great. But if the answer is no, then we need to know when to get out of buys, when to get into some steep, deep selling. All right. Like I said, I'm not excited about this idea that the crisis is over. I don't believe that at all. We've got a bullish engulfing pattern here on the Russell, right? Beautiful turn. Markets didn't make it all the way down. So we might see some more downside in the future to fill those orders. On the weekly, same situation. Price on the other side of a downward trend. And really, you know, the only thing that looks like could potentially stop price is the specific supplies a little bit higher, right? So yeah, this week have fun. You know, if you can get in a good entry to buy. You know, buy well. God bless. Buy with knowledge. Buy knowing when to get up. Buy knowing when to get your money back, right? So that you don't risk it all and lose it all. Okay, so that's, you know, continuous buying. You can see there's just you know gap after gap. And if the gaps bother you, you don't know how to read the gaps or trade the gaps. To be honest, I should start my whiteboard series on small technical things like this. And this is what you're looking for, right? Just move to a Kinihashi and then you'll see for yourself. So this is H4 on the Russell. Once again, I just want a 365 number with a 25 to 30 point difference. And that's 1926, 1925. There you go. You know, try your luck there. Shoot your shot, right? So, you know, but don't forget, if this works out, don't forget to figure out where to go. Indices are very expensive, right? Check your account, check your lot size, right? China 50, CN50 will be the ticker. Let's go to Rwanda because I know that is where I've marked up a lot of the charts. Right, so we spoke about this, you know, a few weeks back. Let's go to weekly. This kind of get a big beat on the stuff, man. Yeah. Right, beautiful work. This is like, you know, literally price came in about 2 weeks ago into this area. I think I briefly spoke to you guys about it. The signal was given to you guys on the channel. Oh, I put out a tweet today. I am begging you, because some people bump into me in Grahamstown. I'm starting to realize I've been very naive to see how many people follow my videos and my content. I take the number of subscribers on the channel as a reflection of my reach, and I've been humbled to know that's not it. So I'm begging you, please, right now, if you are taking these trades, please find me on Telegram and just send me screen grabs. I'll always keep you anonymous. I'm not going to be like, hey, look, John is making X amount of money because of me. I would love to see those testimonies. If you lose, send me those screen grabs. I think we need to like really have a balance approach to this stuff. Please just send me results. 365 students, please send me results. I want to hear from you guys. I want to see the progress. Just send me screenshots. Send me, because I always feel so incredibly. I put out a tweet this morning. I was like, I hope I'm not the only tripping on this stuff. These war rooms are so beneficial and shockingly for free. right? So we looked at this area here, and I spoke to you guys about avocado, and I said, it's getting bad, man. It's really getting bad. That knock-on effect that we're able to pick up last year in November has created a $7 trillion housing market crisis because recession on the other side and inflation on the other side, and the biggest housing market in the world, which is China, is crumbling, right? And the knock-on domino effect is coming to the market. It's like 2008 all over again. But people hate that. They don't like me saying that kind of stuff. But just be very careful, right? So China 50 has done nothing but fall since the last time we spoke about it. And then we spoke about a relief sell here. For those of you who missed the first sell, right? And that's what we're waiting to see. Be very careful about this one. Right? We've got a double bottom, right? So markets have, you know, almost kind of like drawn a line in the sand. And we shall see how that double bottom, you know, fares with the daily supplies in this area, right? So this is what this area looks like, right? If you really want to take a much more sharper area of value to risk less because of your account, then the sharper area of value would look something like that, right? So just be very careful about volume-based candlesticks and normal candlesticks. If I draw a bearish Fibonacci to just check where the retracement would be, you will see that this is at that 0.382% area, which if you take the course, you will be taught in Module 2 about these fib levels that simplified PCPs, potential continuation pattern, right? So that's what the charts are telling me, and so I'm still happy with the previous analysis. But full disclaimer, remember, if you are literally in here, then you should have already locked your first sell, right? Make sure you put your stop loss just above this area here. So give it a time to wick other people, you know, so that this is all protected. And technically speaking, the cost of running this trade is from the beautiful free profits you got from buying premium, buying high, attending war rooms, you know, a month ago and taking the trade. But I am looking forward to taking a second trade here, and I really am hoping it works out. If not, then we'll get stopped out here, lose a little bit of money, and then get kicked out with all the other profits we've made. Right, but this is an interesting place to be. So PCP area 0.38. You know, I can't see any type of significant order block at the golden ratio, except for here on H4. But on daily, we've got nothing. We really got nothing on daily, right? So if I was a betting man on daily, I would skip the H4 and maybe come and wait up there if this doesn't work, right? So not much to do here. Remember, don't just be a sucker. Check your price. You've got a list of what you're doing. Be organized. If you get an arrow effect, whatever I told you before about arrow effects is when price does not distribute on its way to you and just comes with the force of the bulls, right? Get out of there. When a bull is charging at you straight, like on contact, it's got its mouth on you. You don't stand straight and assume that your six-pack can handle the absorption, right? If markets don't start to, just like, consolidate for a day or two, give me 2 or 3 red candles, 1 red candle, like move to the side of it. Don't come straight at me, buy, right? Because then that just becomes, sometimes a recipe for disaster. So if that was to happen, I would delete my pending order. I would not get triggered. If I get triggered, I'll get out at $1. Better safe than sorry type of thing, right? So it's not a good way to do the whole stick to the plan thing. But I'm saying open your eyes. This is all you need to do. Write what you're doing and then track it. Just track it. That's your job. Just track it. Okay? Cool. So, this is done. And then next on our list is AUDUSD. We just look at the company indexes. There's a discorrelation. When indexes fall, the currency is strong. When Nasdaq is going up, the dollar sometimes falls, right? So we just look at AU200. There we go. This is AUDUSD, right? These are all those pending orders that we're still waiting for. Right? I want to see now if we're still on the right track. When I look at AUDUSD, it's still hanging from a governing perspective, which therefore tells me it still needs to fall. I'm still bearish on this chart, right? Right now it's going up, but I'm still bearish on the chart. When I go to my weekly time frame, it tells me that, look, we are very much fast approaching a supply. We potentially have made contact with the supply if we to draw the area of value correctly the way I have, right? But what we've also done is we've also created a mayoral demand to catch price, which is interesting because when you make contact with the supply, price has to fall down. But when you create a bullish engulfing pattern, the next candle is normally red anyways to go retest this area before going up anyways. So we're going to get a fall of some sorts very soon, but how sustainable is that for? We've had multiple breakup structures on this chart since the previous head and shoulders that I drew for you, years ago, last year, February, right? There it was, and then breakup structure and price came back, double bottom, price came back, breakup structure, and this is where we are. There's another, bullishing off in demand there. But long story short, right, markets have a long way to go. They have a long way to go to the downside, right? If you look at the governing time frame one more time, there's nothing catching price. There's nothing stopping price from falling a little bit more. So that's why for me, I'm on the sell side. If you come to the daily time frame, the first sell side, I know we extended this from that weekly view. The first sell side for me is somewhere here. Let's go out Kini Hash and we can maybe get an overall read, right? So let's do this so we don't miss the area of competition. Excuse me. Right, the first sell side is that. Right, so this is the first sell side for me, right? We break clean breaks of structures, and this could be a target for somebody. Somebody who just wants to short swing, that could be a nice target for you. And then for the rest of us crazy people, we have TP1 here, TP2 there, break even, and then TP3 we hold until we get to the governing demand, right? So AUDUSD for now, I don't see the need to change my mind about my analysis. If this doesn't work, you can say I already got an unfilled order waiting for the top. That's pretty much fine. And just so we're clear, because we've done this before, I do have two pending orders. Once it's yellow or green, then pending orders have to be set. If it's red, it means a cowboy area. But I do have a pending order here with smaller lot size. It's the first area of contract with a higher supply, and my usual 5% or 1% or 2% risk area is somewhere there. Right? So these are my two current pending orders on AUDUSD. Not to annoy you, but it's very important that all these charts with USD are always read in relation to what is the DXY chart doing. Simple, because that's very much very important. But I expect some a similar play-by-play situation. This is going to be very good money. Absolutely good money. This is going to be absolutely good money. If it plays out, we are happy. We are very happy. We are 700 pips. Just going to give you that, right? If it breaks down and goes a little bit higher first, 895. That's crazy. That's very good money. So we are very happy about that. So we shall see what's going to happen with the AUDUSD. The next chart we have for you guys is Swiss franc JPY. Right, remember, same situation back then when we spoke about it. Swiss franc JPY monetary policy divergence was the game of the street. So anything on front of JPY is strong than JPY because of interest rates variations of monetary policy divergence. Swiss franc JPY, if you remember me telling you guys, remember there's no supply. There's no governing supply. We don't even know where the roof is anymore because they've opened the roof and it's gone. Gone. Right? They've opened the roof. So you want to trade this very, quite smartly. And the smart play to do was to not look for sell setups. We don't know where the sell setups are, but to look for very good low buy setups. And then as soon as we get into them, hold them, up until, price decides it's now time to create a supply. And you'll see price create a supply with you. The dailies will start to form a supply. First it'll be H1, H4, then there'll be strong daily supply. Then that daily supply after a week will create a weekly supply. And when those patterns start to become clear, that wait a minute, this whole month this thing has been dropping from the time I bought. I'm still in profit, but it's starting to drop. Your governing will print a supply, right? Price is fractile. What does that mean? It means everything that we see on the big time frames is duplicated across all the board. If you don't know this, it's because you haven't clicked the link down below to join us, right? So take the course, right? So that price fractality is a very sensitive thing in supply and demand trading, specifically for assets like this that generally have no a target goal, right? It's just open-ended. The governor is asleep. There's no governing supply. It's just demand pushing. So you can see I did say the safest place for me to want to buy is down there, and I'm waiting. I said there's going to be some activity up here, some potential selling. You can see that markets did rally, markets did try and sell for a day, but then Thursday and Friday markets came back up. So now the question is, will they break up there, which would be very much in tune with this whole chart keeping, looking for higher highs, or will we finally have a relief drop to this level, and then we can join markets, right? So I'm not changing my mind from my previous analysis. I'm going to wait to buy all the way down there. I'm going to do nothing here. I know there's a beautiful supply, but you can already see, as pretty as the supply was, it didn't really have the type of momentum to push price down. And we still need to see what this order block is going to do. The cowboy within us, I haven't given a cowboy trade. A cowboy trade is a high risk trade with a higher probability of losing, but still within the realms of the rules to potentially make you money. I don't like taking too many cowboy trades, but a cowboy could try and buy here, you know, and see for themselves how far price will come. I'm gonna, you know, you can throw a small lot size in if I wanted to, but I definitely want to take this home and buy down there. So for me, I have to wait for Swiss franc JPY. Chart number 11 with us is USDCAD. Once again, folks, don't be shy. If this is helping you, if you like this, talk to me. Tell me how to make it better. But more importantly, please like the video. If 5 people can just actually share, you know, today's war room on their Facebook page or Facebook groups, I would truly, truly appreciate that. Just 5 people, or 3 people, or 2 people, or just 1 person. I would absolutely, absolutely appreciate that. Same sequence with USDCAD. We spoke about this. Remember, the dollar hit a supply. I'm not even going to go through the governing time frame. Like, the analysis is perfect. We're waiting. We say this thing is going to sell non-stop until we get to our daily buy area, and we were not wrong. We were absolutely not wrong. In fact, now you can actually start to want to join. You can actually start to want to join the selling. Now that they've kind of like cleared this whole area up for us, right? Those of you who are brave and want to sell, hopefully you get the chance to do that right there. Definitely the trade idea for me here is to buy, but if the opportunity comes to sell, I'll look into putting a small lot size there, right? Why not make some money? That's the clean trade idea. And again, as long as there's a dollar weakness, look at the weekly time frame. Finally creating a weekly supply that I like. Because remember, the first one here was not a real supply, so you could not draw it. There was not a engulfing pattern there on the USDCAD right here, right? It was not. But now we're talking, because markets closed on Friday. That's why I'm saying finally now they've actually also cleared the way for us and given us something to play with. So USDCAD here could be potentially a good sell, but the real good trade that we want is also the buy, right? So 274 going down, 274 pips going back up. It's about 600 pips, give or take. USDCAD. AUDNZD, the next one. AUDNZD, the next one, right? So, you know, am I still in this trade? I don't think I'm still in this trade. It's still in profits, but I don't think I'm in this trade. Yeah. Right. So oh yeah, I did speak about this. I told you guys why. I remember now, right? So this is quite an argument. There's a big supply there, multiple touches. We want to see what price is going to do. Will it just make a retest, come back down? We did get into buys a long time ago. Don't think it made that much money, right? In terms of risk reward, anyways, right? 1:3 on the dot, and then which is good money, but it wasn't the type of trade you want to run into a supply. When there's a supply for me, I get out. I have not actually gotten back into this chart, so let me remove all of this. Otherwise, I'll keep telling myself I'm in it when my P&L doesn't have this running. So what I would like to do, which is new, I guess, for this is now to update these areas of like, number one, I do think there's a high risk buy area. Right, we've used it way too many times, and markets have used it more as well without us. Right, so number one, that's a very high risk buy area. Number two, I'm not entirely sure how long the downtrend will be. Right, how long the downtrend will be. So I really feel like we should move this back into a watch list status. Right, AUDNZD should be moved back to a watch list status and not really a trade list status. I prefer that we break the demand and fall a bit. Then when we come back to it and there are new areas of value to trade from, then we can. But right now, let's let it fly. Let's let it fly and fall, right? That's AUDNZD. I'm gonna just write here watch list. It's not something we want to trade right now. Not trade. Okay, cool. Dollar DXY. My favorite all-time index, the dollar, the heartbeat of the economy. Right, so the dollar did do, arrive here, and I remember I said, geez, it left us or left me, but I don't want to get in, I'm going to wait for this. And lo and behold, for sure, the dollar came forward, right? And remember, we entered the dollar there, and I actually pointed out a lot of things when the CPI came out. We spoke a lot about what to hold on the public free Telegram group. Just scroll up, it's all there. On the public free Telegram group, it's literally all there where we spoke about the dollar. So we've got moments now to really consider what we're doing here, right? And I think we should wait to see if markets interest get down there. If the weakness within the dollar will continue, still inside that governing supply, and for now there hasn't been actually signs of the dollar fighting against it. There's actually been more, signs of the dollar coming slowly but moving down. Right, I won't be taking any more sells in the DXY. I've got the 1, 2, and I'm just going to hold them hopefully up until there. If markets were to breach above this area, say above 106,437, then I'll start to look into just locking profits and getting out. But for now, I'm really hoping to see price land there. Then after that, we can then start talking about the structure and the integrity of the US dollar. If I go to the weekly time frame, you will see that the weekly time frame is telling an interesting story that we've seen, right? We've got breaking off and pattern test PCP. So that's why I'm saying I would like to see a potential. Now, the weekly time frame, because we spoke about in the secondary room, of course, would signify a retest of a bullish engulfing pattern, right? Of course, would signify that markets have made contact with buyers and anything can happen. So that's why I'm saying I'm waiting to see, which side price will choose to be on this week. Are you on the PCP week, or you want to start to react from this bullish engulfing pattern? But it is there. If it does decide to continue down, then according to the weekly time frame, we really could be looking at the dollar coming back to at least 102, which would be really great for that trade. And you know what that means. And it makes sense. If you think about it, the market's on opium, right? Opium, CPI is inflating, so the markets want to run. So money must come out of risk off assets back to risk on. When I started this war room, I showed you that the VIX is falling. Then I said, when the VIX is falling, it's an indication that institutions and hedge funds are reducing their hedges, right? Because they believe that markets are now slightly more certain. Right, so I'm playing that whole trade thesis. When I say my dollar fall, when I see that rotation back into capital while we prepare for the next phase in the market, right? Euro, AUD, and actually what I'm going to do just to reward people for being in our public Telegram group, I'm going to take time to put all these charts together and send them as pictures as well, right? So that's what I'm going to be doing now for the public Telegram group. But moving forward, I am going back to our root system. So questions, Q&As are going back to the private Telegram group, right? It's the last part of the year. I have to work with my students. I have to really make sure that we are growing, that if you join us at the beginning of the year, there's a difference in your trading by the end of the year, right? So I'm going back to my root system. So please just be aware of those changes. When you see the public Telegram group shut down in terms of comments, I'll just be dumping information, dumping charts, but my engagement and my Q&As and all that kind of stuff now is going full-time back to private students. Really, so you really want to join us as quickly as possible. Right, Euro AUD, I mean, come on, man. Just clean analysis. It's just beautiful work, right? So we've got this continuous fall that we spoke about, and we know that the first time we can expect anything to change is down there. Right, now, where can we join, or are we joining, right? So we're not yet in, right? Obviously, you guys would know this from the last time I analyzed this chart for you. It's not an expired trading idea, right? I'd love to sell from there. So therefore, I have a pending order somewhere here in the area of competition, right? And what the price has done this past week is we're waiting to get reconfirmed. This market is like, yeah, the sell pressure is so much so that we've created a new area of value. And I'm not going to waste time. I'm going to put another one here. I'm going to go lower risk on this area, fundamentally because it's the lower supply. But I'm going to go in and see. If I get stopped out, then great. I'll get this. The little money I'll lose here. The 15 pips, the 5 pips, guys, look at this. This is like about the slight move. I'm on the weekly time, of course. But okay, let's just go to the daily and I'll show what I mean. But your stop result is above your area of buy. So it's like 10, 15 pips. Whatever I lose, excuse me, I'll make it all back if I'm right when price drops from there. All right, so that's something to always consider. Right, so let's quickly switch up to daily. You can see markets are already leaving daily on Friday. This is the usual that we just do now on the weekly. I'm just going to tighten this zone up to look something like this, right? So something like this, right? So you can see there's a bridging of when pattern markets came in and dipped again, right? So hopefully, sometime this week, our markets will love to put more money in my pockets, and we'll get some action like that. And if that doesn't happen, then and market side to really run amok, we'll have to break through the supply, to go all the way up there. So it's going to be a lot of work for someone that clearly wants to fall, and to fall it will. That's incredible, right? And if you are good at scenario analysis and you choose Euro AUD, you could really come print your own money there. You could really print your own money there. So that's Euro AUD done. Our big boy is gold. Right, that's gold right here. Gold, we got out of gold. Gold has arrived at the first bus stop that we spoke about. After we got out of gold, gold fell into the demand like we spoke about. All these things, a long time ago, prediction is going to come down to this big area. It did, and it bounced back right towards the end of July, and it's been riding back up. I've not yet been in gold ever since the end of those sales that we took. So now we need to start from scratch. We really have a very good perspective on gold, a very good big perspective on gold to anticipate where to now. And unfortunately, because of time, it would be nice to do this with a little bit of COT. A little bit of COT data. Right, so from the governing time frame, we've got the same old story. Right, governing time frame, we've got every time markets arrive at a demand, price goes up. Every time markets arrive at a demand, price always goes up. So what do we do now? Right, and that's just it, right? So markets have arrived at this demand 1, 2, 3 times. 20 March last year, recovery buys of assets. The drop in August a year ago, and then a year later, markets have come back now. They're moving again. Markets move in 3 months, take profits in a year, in a 10-year span. You've heard me say these things many times. So that's what's going on. Now, I don't like where our first sell setup is. All right, the first, first of all, I am not. I really wish I was part of the buy. I like selling gold. I don't like buying in this climate, right? I'm a long-term buyer of gold. I can show you screen grabs of my real account. I'm still holding buys from all the way down here. I'm still holding a couple of these buys. But I would really like to rebuy gold at 1.5. I've said this before many times on the channel. But right now, I don't like where we are in terms of selling, right? And I really wish I bought a little bit of gold at least up there, and I didn't. But where we are right now, there's no weekly confirmation, right? So it really makes it quite, treacherous. I agree that the daily supply that we're targeting is at a golden ratio. So it's really like more risk if you can, risk if you must. But just be very kind to yourself. This doesn't work out, right? Because there's a better premium sell-off rate a little bit higher than where price is right now at about 18.25. Now, on the daily time frame, you'll then start to see what I mean. But this premium sell is also the same selling rate that we actually sold a lot of gold in June and July. A beautiful swing trade that we took all the way down, and I was stupid enough not to take it back, coming back up. Right, so this might be a tempting place, and if your orders have been triggered like me in this area of value, then just be looking for the signs to get out, or get out as soon as markets open on Monday, because you will not be, you won't get out in a loss. In fact, the way price is set up right now, we should expect price to actually drop a little bit first before coming back up. So I would like to say I'm changing my mind on gold. This is not necessarily the best place, or the best place is to, if you don't mind making zero, losing zero, not making zero, which is always a good thing sometimes for me. It's just to break even. And then if price goes down, it goes down. If it comes with, you got to start at zero. But if it goes down, it goes down for real, then you are lucky to be in the trade. So I don't feel as comfortable about this area of value. I just really want to be very clear about that. Right. So the next time I'll feel very comfortable about a gold sell is when markets get to it a little bit higher. Right. Until then, I am now declaring this area to be a cowboy area. And the unfortunate part is I'm already triggered in. And if you're a religious follower of the war room, then it means you're also triggered in. So don't panic. Close with the little profits you have or break even. That's my Not financial advice, just telling you what I'm going to do. Not financial advice, telling you what I'm going to do. Right, and then we need to deal with these areas at the top here. Bearing in mind that some of these areas we've used, so we definitely used this in June. This was our sell-off, our big gold payoff came from this area. And now we need to assess whether gold can handle a retest of the zone and actually move far. Right, so maybe we'll discuss that a week from now. Let's actually first see what happens in this level, right? Because on the weekly time, the mayoral time frame, gold wants to sell again. Gold wants to sell again. Gold wants to get here and really pour its heart to to the downside. But we really need to make sure that the fractality and the confluence is in line with all of that, right? Even my voice is really starting to get tired and so, but we are almost at the end. So I think today I'll power through to the end. Euro Swiss franc is our next chapter. We've just got 3 more chapters and we're done. I am very happy. You probably wouldn't see it in the edits, but I've gotten up 4 times and made 3 cups of ginger tea. So I'm very, very, very happy. Very, very happy with this war room. Right, Euro Swiss franc, I won't waste your time with long-term perspective. We're still waiting to see what's going to happen. Remember, there's a massive wick on the governing time frame. Remember, it was me who told you that we were going to have to fill this entire wick no matter what, this was going to get filled. The price was going to keep falling. I said this and it's happened. Now markets are sitting on it like it's this entire life depends on it, right? This is absolutely beautiful to see supply and demand really at work here. And we could be looking at retracements. Now, what I say to you guys last time, I'll say to you again, is it's very difficult for me to give you a reading on buys. I can't give you a reading on buys here because there's really no bottom. It's just a long wick that needs to be filled. There isn't enough sufficient institutional buyers thinking about propping the price of Euro Swiss franc up. Because of that, be very careful, right? Be very, very careful of that. Right, what happens on the mayoral time frame is we also got a new sell pressure signal that price will want to continue falling again, right? Very close to a potential turning point in price. So it's a very high risk sell area, but it does exist. Long term, we would like to come back to these areas and sell like crazy again. But what are we going to do in the now? The now we're going to look at the daily and we're going to see what is possible, right? So this new sell pressured area on the Euro Swiss franc really looks like this. So if you are a cowboy, a trader, a high risk trader, and you just care about quantity of trades versus quality of trades, and you're working on some type of law of averages, then you maybe want to try your luck somewhere in there on the daily time frame. You maybe want to see what will happen if prices to come back there. Of course, the bigger risk is obviously all the way down here. All of these are very high risk trades. Both of them are very high risk trades. Some type of stuff I wouldn't trade if I had a small account or if I had a bad trading streak and I was trying to rehabilitate my trade psychology. I would skip Euro Swiss franc entirely right now. NZD Swiss franc. Excuse me. Right, NZD Swiss franc, right, has done what it's supposed to do by surviving the consolidation and moving back all the way up. I'm not going to change my mind on previous analysis. I would very much like to wait a little bit more before I start selling. There is here, the retail golden ratio type of situation, but you can see my yellow here is the red boundary. It's not a zone that I trust the most, not the best imbalance. Let's just double check that. Okay, no, it's fine. It is a very strong pattern. So you want to keep your eyes peeled at the final distribution stages when price gets here. Ideally you want for price to create 2 equal highs, some type of liquidity grab. If that happens in front of you without you, and then you can kind of bank on that. But if that doesn't happen, and you don't see some type of manufactured liquidity being taken somewhere here in these areas, somewhere like that, just before price gets to move there, then I would suggest that you move smart. And by moving smart, I mean you just wait for price to extend to a higher level. It's just one of those things, So if you don't get something like that, then I would suggest you wait and we see what's happening in here. That's what I would do. I would wait to see what's happening in there because that's a very, that's a far much more better place to be at on the NZD Swiss franc. But until then, waiting game because these buys, you know, they look very dicey for me to even jump in on. But I'm glad markets is now starting to buy up back there, right? EURCAD, right? Nothing to talk about, honestly. I can't buy in here because it's a red zone. It's a dangerous zone. Governing orders don't support it. You know, the multiple touches. There are a lot of factors probably in the zone that I don't want to buy into. There's a big governing supply right above. So I know these buyers are short-lived and markets must come back up here. So I really want to just be a seller in this market. If I look at the weekly time frame, right, I've got a PCP, right, literally. So markets are not moving quickly with the buy orders. Markets are continuously selling in this area. So once again, I want to wait for the sell side. If I look at the daily, I get that type of confirmation. So these pinning orders that I already preset stay as is. And the last chart is Bitcoin. Why Bitcoin? Because Bitcoin is the type of chart that I give you guys every now and again, and I really want you to understand how cool it is that we do what we do from supply and demand. If you just give me a second to go through my trading journal, I'll tell you the last time we looked at Bitcoin on the channel. The last time we looked at Bitcoin on the channel was on the 19th of June, War Room 72. The 19th of June, War Room 72. The 19th of June. I want you to see this. I really, guys, it's like, oh, he just told us to subscribe to his channel, and he told us to click the link down below. So that we can learn how to trade like him, supply and demand. Last time we looked at a Bitcoin, all of this hadn't happened. The last time we looked at Bitcoin, all of this on your screen, or everything inside this rectangle had not happened. Because the last time we looked at this thing was the 19th of June. So all of this had not happened. If you go through the YouTube channel, the last thing that existed on the chart was just this price coming all the way down into the green zone. I mean, that's been blacked out, didn't happen. Because on the 19th of June, I told you that Bitcoin was going to slowly start to move up in an upward trend line. It was the 19th of June where I told you that it's going to look something like this. I even put a question mark. The video is live, right? So it's there somewhere on the YouTube channel. It's not somewhere. Literally go look for War Room 72, then look for follow-up on War Room 74. War Room 72 on the 19th of June, on the 31st of July. Like 19th of June and the 31st of July, right? Literally a month apart. And since then, price has done nothing but move in accordance to what I say. Literally moving an upward trend line, making its way up there, answering my own question if that was possible. And all your market analysts are going to say stocks are up and crypto is up because the CPI data was perfect Wednesday. No, this was a predetermined pathway for Bitcoin on the 19th of June. Nothing to do with CPI that dropped on the 10th of August. We knew this was the flow of price 2 months ago before it actually happened. Right, so please be careful because there is a video that's going to drop on this channel this week called Why I Think Crypto Will Go as Close to 12K as it can end of August. And it's not just because of the supply. There's a lot of interesting, sentimental information I'd like to give you to consider to you before I drop my new Wealthy in 3 Years financial note for those of you who subscribe to that program. Because I fundamentally think there's going to be a fun shift in Bitcoin. I really do believe that. And it's going to be very, very interesting to see that come to fruition. Obviously, what I think is going to happen in the crypto market is going to have a massive impact on not just only Bitcoin, but altcoins, right? So a lot of the altcoins that have been flirting with potentially going to zero might go to zero, and so forth and so forth. And someone is like, what's he talking about? Wealthy in 3 Years program. Once again, the link's down below in the description area. Right, so this link here gets you into our course, the actual supply and demand course, lifetime access, blah, 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 blah. Wealthy in 3 Years is a separate program. It's for investors, not trading, where you get to see what I'm buying and selling. If you want that, if you want to know what coins I'm into, it's a once you get a financial note whenever I'm about to change or find new investment opportunities, right? So you're supposed to get 12 in a period of a year, but basically you get them when I make those calls. When you're waiting for me to make a new call, you just keep dollar cost averaging in the last coins we spoke about. So far this year, we've gone into the classics, we've gone into gaming crypto, we've gone into a little bit of futuristic stuff, you know, on around what's the metaverse type of stuff, right? But moving forward now, we now want to buy stuff that's going to stand the test of time after this big shakedown. So we've got the course, which really cements all your trading for those investment from, and I don't invest for you, so you don't send me money. I don't want your money. I don't want your capital. You do that for yourself. I just share with you what I'm doing with my account. So there's transparency in what I'm holding and buying into, when and why and what, etc. So that's the kind of stuff that I've been looking into. All right. So Bitcoin, the last chart that we're doing right now. And why should we keep track of Bitcoin? Well, it matters, right? So Bitcoin's been an upward channel. It's kind of like a pretty obvious thing, just like NASDAQ 100, just like all those type of markets that finally arrived at a governing demand and had no choice but to turn, right, with that weekly strong area. And I warned you guys in that 19th June war room, I said, respect weekly demands. Look at what they did here. Respect weekly demands. They are strong, right? But don't buy into opium. Hope in the markets don't make no money. Strategy, clear focus makes money. Hope is just hope, right? So this is not going to the moon yet, right? So we know there's a psychological area of 28,500, blah, blah, blah. And we know there's some strong sell orders there. Your boy can't wait to trade those sell orders, right? We see what happens. And the buy trades are easy. We're going to hold them until we get there. And all those profits you're making trading crypto, have a rule, 10%, 30%, 50%. Reinvest them in good coins. Reinvest, build your wealth, reinvest. Don't trade for a car, right? Come on, come to the podcast. We'll help you re-strategize how you think about finance, right? So Bitcoin is moving just as planned. There's no update. There's really nothing, absolutely nothing for me to tell you until this plan has come to completion with a broken supply, which became a flip zone held on. And yeah, so it's crazy. Once again, I do this to you 19th of June. But again, pay attention to the video. I'm going to title it, Why I Think Crypto Will Collapse in August, right? And you should watch it. You really should watch it, because if I'm right about crypto, then I'm right about stocks. If I'm right about stocks, then everyone is wrong about CPI. If everyone's wrong about CPI, the markets are going to get shocked. The markets are going to get shocked. It's going to be crazy, right? It's really going to be crazy. And so watch it. Shake my hand, everybody. My name is Leroy James Maisiri. I'm the head trader and founder of 365 Trading Academy and the 365 Trading Academy Flow, right? 2 days. And I also love spending time with you in my weekly podcast. So please do check that out. If this video inspired you, helped you, and you liked it for whatever reasons, please, no matter what happens, don't forget to like it. I'm just looking for 5 people to share it, share it across their social media platforms. But I am looking forward to seeing you the next time I drop a video right here on this channel. 365. Shake my hand. Have a beautiful week. Peace.